Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, episode 26 for February 28th, 2020, titled Little Known Sustainable Stocks with Potential.And More, presented by investingforthesoul.com. and is your site for global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. Also, I know the markets are incredibly depressing of late, as is the spread of COVID-19, the coronavirus. But the world is not coming to an end. So anyway, now to this episode. Paloma Kubiak has written an article titled 6 Little-Known Shares to Tap into the Sustainable Investing Theme in the UK publication Your Money. Here I'm going to quote extensively from Miss Kubiak. She writes that Thomas Fitzgerald, co-manager of the Eden Tree Amity International Fund, suggests Aptiv. This global technology company develops safer, greener, and more connected technology solutions for cars. Fitzgerald says the company's product portfolio matches key technological shifts in the automotive industry while addressing some pressing socio-economic challenges. For Jerry Thomas, head of global equities at Saracen and Partners, TE Connectivity, the supplier of connectors for the full Tesla range, is one to watch. He says the global connector industry is a $70 billion niche market that has enjoyed 5% annual growth since the 1980s. Connectors are non-standard but must not fail components that link the essential electrical components in the harsh environment that is the modern car. Another area investors could consider are companies that focus on reducing carbon emissions. One example is Hainan Armstrong Sustainable Infrastructure, which looks to reduce carbon emissions by providing capital to companies operating in the energy efficiency and renewable energy markets. While Will Argent suggests NIBE Industria, part of a group which contributes to a smaller carbon footprint and better use of energy. Argent says it has 3 business areas which develop, manufacture, and market a wide range of eco-friendly, energy-efficient solutions for indoor climate control in all types of property. With liquefied natural gas in strong demand as electricity generators close down coal and oil-fired plants, Gas Transport and Technigas is playing a small but crucial role to lower emissions, according to John Buckland, research analyst at Waverton Investment Management. He says, currently, Gas Transport and Technigas is securing nearly 100% market share for the design of containment systems for new LNGC, that's liquefied natural gas carriers, and it is also prominent in the design of LNG fuel tanks for ships generally. as well as land-based storage. LNG fuel enables ship internal combustion engines to meet strict International Maritime Organization 2020 emission regulations to reduce sulfur emissions. For a slightly different take on the sustainable investing theme, U.S. biopharmaceutical group AbbVie is one stock to consider. It is a leader in areas such as immunology, oncology, and neuroscience, according to Johan Swan, portfolio manager of Nordea's Global Stars Equity Strategy. Nordea assesses companies on whether they conduct business responsibly in relation to their stakeholders, and Swan says AbbVie is a good example of a positive ESG company. End quote. Another UK writer, Michael Baxter, posts his opinions of Smurfit Kappa Group in an article, Why I Think This FTSE 100 Stock is a Must for Both Ethical and Income Investors. Originally appeared on the Motley Fool UK sites. He writes that Smurfit Kappa is a paper packaging company with a worldwide client base. It manufactures, distributes, and sells paper-based packaging products. That means that the company is, so to speak, at the front line in the battle against climate change and plastic pollution. That makes it popular with ethical investors. Smurfit Kappa's latest results were good. Earnings before interest, tax, depreciation and amortization, EBITDA, increased 7% in the latest 12-month period compared to the year before. Dividends are up 12% at 3.5% yield and have been increasing every year since 2011. However, it's the longer-term potential of Smurfit Kappa that I think makes this company exciting. As more and more consumers demand better packaging, Smurfit Kappa is likely to see demand for its type of product explode. End quote. Everyone is excited about the potential for electric vehicles. However, it may well be that over the longer term, hydrogen becomes the best source of energy. Tom Leedon of ETF Trends makes this case in an article titled Hydrogen Help for This Clean Energy ETF. Mr. Leedon writes that investors should not overlook the opportunities afforded by hydrogen, and recommends the SPDR, that's SPDR, Kensho Clean Power ETF, is one of the best ETFs for investors looking to tap the hydrogen theme. The SPDR Kensho Clean Power ETF seeks to provide exposure to the clean power industry, both in terms of generation and the underlying technology driving it. Continuing, Mr. Leedon says that in mainland China, Japan, and South Korea, a combination of local and central government works with industry to drive the development of fuel cell vehicles and associated infrastructure. And according to IHS Markit, on the other side of the world, California's low-carbon fuel standard provides a clear mechanism to lower the cost of retail hydrogen and to develop a refueling infrastructure open to all. End quote. Mr. Leedon has also written a piece titled How to Get Income with Renewable Energy Investments, again appearing on ETF Trends. He says that, I quote, finding dividends in the renewable energy space is difficult, and many of the ETFs in this arena have low or no yields. However, the Global X Yieldco Index ETF offers investors a refreshed look at the combination of alternative energy investing and income. Yieldcos are income-generating assets from the renewable energy space that look to deliver steady income to investors. The Global X Yieldco Index ETF yields 2.88% and follows the INDXX Yieldco and Renewable Energy Income Index. End quote. Continuing on the subject of renewable energy investment is an insightful article by Scott Levine. It's titled, 3 Top Renewable Energy Stocks to Buy Right Now, and found on the Motley Fool site. Here's what he has to say, quote, astute investors who recognize this growing interest in climate change will surely be searching for related investment opportunities, such as those in renewable energy-oriented stocks. Fortunately, they need not look much further than Enphase Energy, iShares Global Clean Energy ETF, and Atlantica Yield. End quote. Here's part of what he says about each one. Quote, founded in 2006, Enphase Energy has grown considerably over the past 15 years. Enphase now has shipments of more than 23 million microinverters under its belt, as well as a presence in 21 countries. But it's not only the company's leading position as a global supplier of solar microinverters, as Enphase is in the midst of making its foray into the energy storage market, and Enphase has seen its stock soar. And for more conservative investors who are less willing to take on the risk associated with a single company, the iShares Global Clean Energy ETF is an attractive option. The iShares Global Clean Energy ETF's holdings provide investors with exposure to a wide variety of companies. Besides Enphase Energy and its peer, Solar Edge Technologies, for example, investors can find the wind turbine manufacturer, Vestas Wind Systems, as well as geothermal specialist Ormat Technologies among the top 10 holdings. Since the ETF isn't actively managed, it offers investors a reasonable expense ratio of just 0.46% and a trailing 12-month yield of 1.36%. End quote. Plus his third pick, he says, offers, quote, investors the opportunity to invest in renewable energy while receiving an appealing dividend. Atlantica Yield is a yieldco which has steadily increased its distribution to shareholders over the past 3 years and currently features a 5.05% forward yield, and according to the company's website, it aspires to grow this yield at a 5 to 6% compound annual growth rate through 2022. End quote. My last item appears in the publication Quartz. It has an interesting article by John Dietrichs on what are the top holdings in ESG funds. This might be useful to you in looking at what you're holding in your stock portfolio, should you own stocks. His article is titled, Microsoft stock is the biggest winner from environmental and socially responsible investing. It lists the top 10 holdings in ESG funds as and in order: Microsoft, Alphabet, Disney, Apple, Nvidia, Gilead Sciences, Clorox, VF Corporation, Lin Media, and Verisk Analytics. Well, these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. And to get all the links, stock symbols and more, or to read the transcript of this podcast and with additional information too, please go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally. So let's help create a better world with our investments. Contact me if you have any questions. Thank you for listening. Talk to you again on March 13th. And by then, hopefully we'll have some better market news. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.